Article on the housing market, and $1.3 trillion worth of equity has been lost, erased in the third quarter of 2022. And if we look at May 2022 to the present, we've lost $1.5 trillion in equity in the housing market. A lot of you may be asking, why? Interest rates is the bandit. 30-year fixed rate mortgages are currently in that 6 to 7% range. And it's cutting down on the number of people who can afford to buy a home. And when you have fewer buyers, then that means sellers have to keep their properties on the market longer. And the longer they keep those properties on the market, the more they have to reduce the price to sell it. And that reduction in price is starting to hurt home prices nationally. $1.5 trillion since May 2022 worth of equity erased. Question is, will that continue? I don't know. But if rates continue to go up, 30-year fixed rate mortgage rates, then I would say, yeah, it probably will continue. Now, don't panic, because since the pandemic, the housing market has increased about 46% from an equity standpoint. So if you look at pre-pandemic numbers compared to post-pandemic, equity went up by 46%. If you look at pre-pandemic numbers, post-pandemic numbers, when it comes to home prices are up by 66%. So still healthy when it comes to equity, still healthy when it comes to home prices, but we do see a downward trend in both. And I believe that's completely contributed by 30-year fixed rate mortgage rates. Like I said, at 6 to 7%, that's just way too high for most people to be able to afford to buy a home, right? Even for me, when I'm looking at my personal situation, I'm out here every day combing realtor.com and other websites looking for my dream home. And I've ran across a couple of really nice prospective new homes for me. But I gotta admit, I'm hesitant because of these 6 to 7% 30-year fixed interest rates. When you look at the mortgage payment on the property that I'm looking at, the couple properties that I'm looking at, the mortgage payment at 3% is around $4,600 a month. The mortgage payment on those same two properties at 6% is around $6,500 a month. So $2,000 a month difference because of a 3% interest rate increase. So that is a pretty big number, guys, and it's concerning. Now, I make enough money to be able to manage it and make it happen. My problem is, and what I'm struggling with is, will home prices continue to come down? I don't want to buy a house and then be in it for 90 days and I'm immediately upside down. And that's sort of what's happening. Because when you look at homeowners who have a mortgage, who purchased their properties within the last 90 days, and now they are seeing some of those properties, they're upside down because prices are coming down. So if I'm paying at the peak and then all of a sudden prices continue to come down, 3% here, 5% here, they keep coming down, you don't have to be a PhD in mathematics to figure out you're going to be upside down in that new home pretty quickly, especially if you paid at the top of the market. 275,000 people are upside down now. And year to date, it's like 500,000. Now, that's a small percentage of homeowners in the United States. But when you think about that increase, that's a pretty big jump. That just tells me these home prices are not holding up from recent sales, right? And that's my concern. Man, I don't want to spend that kind of money on a house and then within 90 days I'm upside down in it, or my value decreases, right? Of course, I'm going to put a down payment, so that'll protect me somewhat, right? I'm going to put 20% down, so that'll protect me. But when I'm talking upside down from my perspective, not really necessarily against the mortgage, but against what I actually paid for the house. So if I pay $1 million for the house, and then in 90 days, that same house is selling for $900,000, then I consider myself upside down in the house, right? I may not be upside down against the mortgage, but I'm going to be upside down against my purchase price. And that's what I'm concerned about. So that's been keeping me from really pulling the trigger. Like I said, I got 2 properties right now that I really, really like and I really want to buy. But I'm afraid, guys. I'm afraid to pull the trigger because of the uncertainty with home prices, because of the uncertainty with our economy, because of the uncertainty with 30-year fixed rate mortgage rates, right? Because those rates continue to increase, home prices are going to continue to decrease. That's just the way it is, guys. So I'm not sure where you guys are at right now. If you're looking for a new home, if you're looking to refinance your current home, I don't know. But be careful. Make sure you weigh all the options. That's what I'm.
Our homes are an incredibly emotional investment. They are the place where we start and end every day. It's where
I'm thinking, maybe I should just stay put where I'm at for a while. Even though I'm ready to get out of here, even though I found my dream house, is it a smart decision right now with all this uncertainty to take on such a large mortgage payment? Because I'm not going to pay cash. I'm going to still finance it because of what's going on in the market. I just think, why disrupt my investments right now? Just keep buying, but finance it until such time I decide I want to pay it off. But for right now, I would finance it. But that mortgage payment is huge. It's huge because I'm going to probably have to lock in on a 5/1 arm, maybe at 5.75, 5.95, basically 6%. And my payment is going to be $2,000 higher than if I would have did this same loan a year ago at 3%. And that is hard to swallow. So drop me some comments, guys, and let me know what you think about what's happening with the housing market and home prices. What's happening with 30-year fixed rate mortgage rates. Do you believe they're going to continue to go up? Do you believe they may slightly come down? I think, again, man, it depends on what the Fed does, right? If the Fed keeps increasing short-term interest rates to fight inflation, to bring inflation down, I think 30-year fixed rate mortgages has nowhere to go but up because they are influenced by short-term interest rates. And every time the Fed hikes, you kind of get a hike in the 30-year fixed rate mortgage as well. But curious to know what you guys' thoughts are on that. So drop me some comments down in the comment box. If you want those 12 free stocks from Webull, click on that link down in the description box.